I'm here today with Art Samberg, who is the CEO and founder of Hawks Capital and was also the CEO and founder of Pequot Capital. Art, really appreciate you having me over today. Can't thank you enough. Before we begin, I know you grew up in the Bronx and would love to hear your story as a child.
Grew up the first 8 years, 4 blocks from Yankee Stadium, and I am a loyal Yankees fan.
And then you ended up going away to MIT.
I did.
And what were your majors there?
Aeronautics and Astronautics.
Okay.
It was a very simple decision for me. Sputnik went up in 1957. I graduated high school in 1958, and I was an impressionable, geeky math kind of kid, and that just seemed like the coolest thing in the world.
And so after MIT, what was your next move?
To get a job. My dad was an electrician. It was a great sacrifice for him to get me through the school. Got a job at Lockheed Missile and Space, working on the Polaris missile system, which very few people know anything about, but it was part of the U.S.'s defense structure against Russia.
Did you enjoy it?
No. I found out I'm one of these guys who can solve the equations, but I had no clue what was going on.
Okay, and then you decided I'm going to go into business, and you went to get your MBA?
A couple of my classmates had gone off to business school, and one of them was at Stanford, and he had a bunch of buddies there, and I started hanging around with them, and I started hanging out at a brokerage office. I got interested in the stock market, so I figured, okay, I'm going to go back to business school.
And what was that experience like?
That was a kick, because I was really good at it. I was no longer just able to solve the problems. I actually understood what was going on, and in a really weird coincidence, started carpooling in with 2 other guys, Lee Cooperman and Mario Gabelli. So I decided to go down to Wall Street after that.
And then you started Dawson-Samberg?
Yes. The idea being that I would start a hedge fund as soon as you could. Back in those days, there were less than 50 hedge funds. They were very hard to get started. There were Labor Department rules about ERISA that made them difficult to start. So I started in '86 after joining John in '84.
Okay.
Immediately ran into the crash of '87. So I ran the fund for 23 years, and I think the number is 17% compounded after fees. Usually you do that by having when you have very little money, and I had very little money. I started with $3 million of outside capital and $300,000 of my own. Usually you have a couple of 100% years, and then it tapers off. I started the first year down 20%.
Oh my gosh.
Yeah, it was. So I've often tried to do the math in my head but you have to report accurate numbers. The accurate numbers are 17% a year, but it was really way down by that first year.
Well, you persevered, obviously, and came back strong.
You learn more from your disappointments than you do from your successes.
What gave you the inspiration to start up Pequot?
The fund just started to grow like mad. From the $3 million, I think I hit $100 million in '92, so it took 6 years and a gut-wrenching first 18 months. And then it started to take off. It went 100, 350, 600, $1 billion. And the rest of the Dawson-Samberg business was a very nice cash cow, but wasn't growing as fast. And I had hired some aggressive people to help me, and it just was it was impossible to keep the firm together as constructed. So John Dawson and I split off, and he did Dawson Giamalva at that point, and I did Pequot Capital Management.
Got you. And in terms of Pequot and your investing philosophy, you were in, I take it, healthcare, technology, what else?
Oil and gas of all the crazy things, which makes no sense, I freely admit. Telecommunications. So the really seminal moment was I wanted to hire some good people. I want to hire the best people.
How did you go about finding your talent?
It's the hardest part. And it's the hardest question to answer. intelligence was the first thing. But just as important as intelligence was passion. Somebody once told me early in my career, don't confuse bull markets with brains. And it's definitely true. There are times when you just feel you're the stupidest person in the world, and you've got to persevere through it. And it's easier said than done. So I like to sense whether a person is that kind of person, whether they're going to just shrink and fold when they're just on a cold streak, or if they're going to rise to the occasion, work harder, maintain their composure, and overcome.
In terms of finance, in terms of Wall Street, things have changed a lot. I mean, you had a great run during your time when you first started with Kidder and where you are today. Do you think it's as attractive today?
No. The market's become huge. It's now, with the growth of pension, all good stuff for society, but it has made markets more like a piggy bank than an allocator of capital.
Tell us a little bit about Hawks Financial.
Hawks Financial is my decision in 2009 to shut down Pequot and look after what I wanted to do for the rest of my life, rather than react to the changes in the financial business. So I wanted a family holding company. So Hawks Financial is that. We're invested in a lot of companies, and they are in the technology area, which has always been my greatest love, medical devices and pure medical science, and in alternative energy.
You're back at MIT and you're presenting to the graduating class. What sort of advice would you give kids today? Right
now, I'd ask them for advice. I'm not quite sure what I would tell them, because at that age, they're 7 years away from starting their own company. I would say if you're blessed to have the mental equipment to do that, don't sell out.
Art, really cannot thank you enough for your time. What you've done with your life is incredibly impressive, and I wish you continued success.
Well, thank you very much, Skitty. It's been fun.
You bet.